Dun, 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 dun.
Young J-A-C-K-A-K-A, Rico like Suave, young Enrique, speaking of AKA, she's an alpha but not around your boy, she be quiet around your boy, hold on. Young J-A-C-K-A-K-A, Rico like Suave, young Enrique, speaking of AKA, she's an alpha but not around your boy, she be quiet around your boy, hold on. Young J-A-C-K-A-K-A, Rico like Suave, young Enrique, speaking of AKA, she's an alpha but not around your boy, she be quiet around your boy, hold on. Young J-A-C-K-A-K-A, Rico like Suave, young Enrique, speaking of AKA, she's an alpha but not around your boy, she be quiet around your boy, hold on.
What a tune, man. What a tune. Back into it. Let's get us in the mood. Let's get us in the mood. Let's wake us up. Alright. Get one more song to get us in the mood. The mood. So another day, another dollar. Let's take a look. So yes, Trump's inauguration yesterday. If you look on the screen, you can see we still have the same setup as yesterday, because I feel we've still got areas to cover in those sectors. So looking at FTSE 100, looking at crypto. Let's delve into crypto a little bit more. And obviously pick up a couple of things for macroeconomics as well, which we can do today. So, 7 o'clock. So at 7 o'clock we had the claimant count change. Ooh. Now look at this. The actual was 0.7. The forecast was 10,000. Previous was minus 25. Where is the minus 25 on? I swear I haven't seen that in a while. So again, this is the change in the number of people claiming unemployment-related benefits during the previous month. Actual less than forecast is good for currency. So this could be our first starting session. Let's really delve into why this is. Why is this? On a country's currency value, here's why a lower than forecast number of people claiming unemployment rate is typically seen as a positive for a currency. Indicator of economic strength, which makes sense, doesn't it? So let's get our economics blog. And as I said, at the end of this week, I'll compile what we've learned and have it in nice sections, and that'll be great. So tab 2, we'll start on a fresh date. And we are looking currently at claimant count change. Very nice. So claimant count change is the change in the number of people claiming unemployment. So it's the difference. So why is it good for the currency? Because it indicates an economic strength, because it's a decrease in unemployment. Yet, strong labour market is often linked to an increase in consumer spending, higher economic output, and overall economic growth. That makes sense, doesn't it? Because more people are working. More people are not being lazy cunts. So, that's good. Impact on monetary policy. Central banks often use employment data as a key factor in setting interest rates. A strong labour market may lead to tighter monetary policies, including potential interest rate hikes to control inflation. Yes. Because what we discussed before was the fact that if inflation is increasing, this is because there's more demand. And therefore, when there's more demand, prices rise, which makes sense. And then when inflation is increasing, you then try and increase the interest rates to bring it down. How will that do that? Well, we discussed before that if the interest rates increase, it means people are less likely to spend money because they're getting more money in their bank accounts, but also borrowing money. Borrowing money will cost more, and therefore people are less likely to spend, and therefore the demand falls. That makes sense. That's really good. I think that makes sense, and I think that's good. Building on from what we did yesterday. Morning Max, welcome back. Watched you for many years. Hello Aaron, beautiful man. Many years, man. Many years, and we're back in business. I'll do a little analysis on the charts in a second, but let's take a look at GJ and Goldie. Let's take a look at anything else. So let me just take a look and see how this news was. Nothing much. Interesting. To be fair, now let's move it a little bit. Yeah, a little bit of a shift. 30 pip move on GJ. So obviously, as we expected, the actual forecast was better than. Sorry, the actual was better than the forecast in terms of claimant count change. And again, just to reiterate, the claimant count change is the number of people or the difference of people going on to unemployment benefits. They expected a large amount, 10,000 people, but it's actually only 0.7, which is good for the economy. It shows that the economy isn't as bad as they expect it, which then gives it a robustness. We just discussed here. It gives a good indicator of economic strength. It means the central banks. It means the central banks are, could potentially look at maybe hiking the interest rates to control inflation, because again, people are still working, right? So people have more money. And yeah, and then that's what we see in here on GJ. This makes sense because now you can see we had a push from the downside up to the upside because the currency likes that. It's good news. It's positive news. Okay. So let me just go through analysis. I'll do what I previously did on the analysis. So currently we've been in a little bit of a weekly kind of channel here. Not channel, and more of a tunnel, I suppose. It's not really much of a gradient. This weekly time frame, the previous candle closed bearish below. Okay. But on this one, it closed on support. So interesting to see if this candle could potentially reflip, break the low, then you'll see quite a nice drive, probably down to 186. For the most part, though, daily time frame, you can see here. Let's just mark some zones up. This is the daily support, which we previously did tap. Right here. And currently we have some daily resistance right around here. Makes sense. We held it here for a long time, here again. So it's quite an interesting bearish zone. Strong resistance here. So now you're in this range. It's pretty obvious range you can see here. Take a look at the 4 hour. 4 hour previously we've closed bearish. This candle's obviously pushed up, but it's only pushed up because of news. Realistically here, you're in quite a nice bearish move. If you look here, I haven't gone on to tested my new strat with GJ, but we'll see if there's opportunities there. Looks like there was already one, I can see. This is the 4 hour, but we'll see. So yeah, you can see that here's the high, here's the low, there's the second high, there's the low, there's the second high, there's the low, there's the second high, there's the low, there's the second high. So what we're expecting, another low. Okay. So we're bearish, basically, is what I'm saying. But currently we had some positive news, and that's where you're starting to see the increase. So if we were to look a little bit further in it on the hourly time frame, what else do we have? Well, for me, we have hourly supports right here. Why? Because we have it here. Hourly's holding, hourly's holding, hourly tapped in, holding. Take a look at the 30. Does this make any more sense? Yeah, obviously a little bit choppy here, but for the most part, it's right around these areas. So, I mean, what you'd probably want to see, I mean, I would want to see, is I'd want to see, let me just take a look. Where is it? I'd want this candle to come up, find resistance, close bearish, and then try and sell it back down. Yeah. Oh, fuck, did I just redo? Yeah, I did. No! Can I go back? Ah, thank God for that. So, yeah. In my opinion, I'd wait to see how it reacts here. Maybe wait for some bearish candles to close. And again, if I was trading it, I would wait for res to form. Oh, anywhere in this area, really. As long as it gets up. You can see here, though, on the 15-minute time frame, you can see that this buy here, if you had the anticipation of news, is quite good because look at the candles. It's very clean. So I do expect it to come back up to here, which is like 10 pips. Not bad. It's not bad. Not bad at all. Let me just get the Financial Times. Did anyone watch the Trump inauguration? Oh. Trump signs order to withdraw US from World Health Organization. Markets were volatile. The dollar initially weakened after Trump's inauguration address did not announce tariffs, but rallied after he said the US could impose 25% levies on Mexico and Canada. Oh. So we discussed the tariffs yesterday, didn't we? Right? We discussed the fact that the tariffs are obviously going to, potentially bring in some new money to the US. What they've got to be careful for is how much they actually import from those countries, because they'll probably do the same, right? Or they'll use it as bargaining power. It depends on how he plays it. But it'll be interesting to see. It'd be really, really interesting to see. Where was it? Yeah, here, trade tariffs. So obviously he's trying to protect US industries, making sure that it's more beneficial to build in their own country than to import, which I think is reasonable. Trade leverage for bargaining tools, that's the main one I think he's probably going to be using it for. And political reasons. So yeah, making sure he's the big dog. So that is going to be interesting to see. So the World Health Organization, they're going. That's pretty interesting. We kind of knew it was all bullshit anyway, didn't we? With the whole COVID crap. Canada's finance minister said Trump's threat on Monday night to impose tariffs was nothing new. Our country is absolutely ready to respond to any of these scenarios, he told reporters. It would be a mistake for the American government to proceed with imposing tariffs. Oh, interesting. Interesting. They're putting up a fight, eh? They're putting up a fight. Okay, so first article that I want to go through. Let's take a look. UK employers cut jobs after budget, official data shows. So what does this mean, right? It means that companies are cutting jobs. Now, I think we discussed yesterday on stream about the financial repercussions of the government putting on national insurance increases. So let's just read this. UK employers cut staff numbers after the Labour government tax-raising budget, even as wage growth accelerated. Payroll employment fell by 0.1% between October and November and was 11,000 lower in the 3 months to November than in the previous quarter. Early estimates for December suggest a bigger month-on-month drop of 47,000 to 30.3 million in payroll workforce. At the same time, average weekly earnings in the 3 months to November were 5.6% higher than a year earlier, but both including and excluding bonuses. So it looks like wages have increased, but does that not inflate? So my question to this is that not? Are we not discussing? Is that also the net present value of have we put in inflation in this conversation? I hope they have. I'm sure they have. They're clever people. So let's just say, so pays have increased, but the figures come as evident amounts that economic growth has halted following Rachel Reeves' October budget, in which businesses bore the brunt of 40 billion in tax increases. An increase in employers' national insurance contributions and a rise in the minimum wage have combined to leave some sectors facing a sharp jump in costs, with a measure to take effect in April. Yeah. So just a little recap from yesterday, if people weren't here. The UK government raises. The UK government they changed the threshold, but they also changed the percentage. Okay, so just to show you how bad this can be, I'll show you here. Can you guys see the screen all right? Yeah, I think you guys can. So let's just say that, you work in a company that has, 500 people working. So it's a medium size, it's pretty big. But it's not too big, remember that. If you look at, any other company, let's just take a look at like HSBC employees. Look at that. So they have 34,000 people. So let's just do a HSBC example, right? So previously, 34,000 people they employ. Let's just say on average they earn 30,000, which is the average anyway, right? So in terms of the finances, let's take a look. Did I have this on it before? Where's the stats for the UK? I'll get it. So let's take this for example. Here we go. So 34,000 they had, right? Previously, let's just work it out for one person. Let's just say done 30 grand. And the previous threshold was 9,100. So we do 30,000 minus 9,100 to get the money that they're going to be charged for. And the interest rate, the rate was 13%. Oh shit, not that one. Oh, fuck off. Let's do this again then. 2 through 9. Times by 0.138. Okay. So previously, if you had a company, you'd have to pay £2,884 to the government for a bizarre reason, which they won't be able to explain. Okay, so in previous, that was 2,884. Okay, now if we look at what is going to be happening now, you can see they've reduced the threshold, so it's actually now on £25,000, and they've actually increased the rates as well. Okay, so we actually have this figure now, 3,750. So it's around about £1,000 more a year per person. Now you might not think that's a huge amount, but when you're dealing with any company, let's just say you have. Well, I mean, we discussed there. I mean, HSBC had what was it, like 2,000? So let's take a look. HSBC. They have 34,000, right? So 34,700 times by £1,000 is the difference. So they have to give them an extra £34 million on top of what they've already given. Okay, which is, I mean, that's a lot. That's a lot. So if you look at how much it was overall, it was like this, wasn't it? So £128 million they've just got to give, which is all right for a bank. I mean, I don't mind a bank taking that money. It's a nicer, digestible outcome. But for me, it's like the company that I work for. They have 500 employees. So it'll be an extra 1.8 million. Like, that's a lot for a company. So that's why companies are looking to potentially reduce the amount of people that work for the company to save on those costs, right? Which is what I'd say the right political spectrum would say would happen, because that's what happens, right? Companies are not going to sacrifice their own profits. They'll just get rid of people. Unfortunately, because it's a fucking business. So, very, very interesting. Right, let's take a look at Goldie. Let's get back to a little bit of Forex over here. Goldie is actually Goldie. No, it's not his all-time high yet, but it's looking like it's coming for it. Monthly time frame, been very, very bullish. Again, I still find it so bizarre how Bitcoin, gold, index funds, every single part of the stock market is at all-time highs. It does not make sense to me. If anyone in the chat knows why, it would be interesting to see. So Daily Candle has made support on the previous day, which was on yesterday, on Monday. And now we are continuing. We're breaking above this previous zone right here. Look at the 4 hours. 4 hours are printing very, very nicely. Okay, where's the first next resistance where you potentially want to take some profits? It'd probably be here, wouldn't it? Because when we came up before, we used it as resistance here. There's also maybe a little bit of a minor support here too. On the 4 hour. Let me just change this. Yeah. So, hourly 30-minute, let's take a look. Let's get further into the chart. Yeah, so 30 minutes breaking previous highs. We're breaking Asian session. Asian session had a big push to the upside. And these candles are printing well, you know. Look at the 5-minute time frames. Be nice, strong candles. Now, I probably would, on this new strategy that I'm looking at, took this trade here. Because the candle opened up, did not break the high, made the low, so it should make a top wick. Take the sell there. Would that have made sense? How much? Yeah, 10 pips is not bad. And then you got that whole gain. Very, very nice. I didn't take gold this morning. That was good. Now let's take a look on the 30-minute to see what are we dealing with now, because it looks good for us to continue. However, you got to make sure the left hand side looks okay. Yeah, so we're coming towards resistance. Can you see? 2,731 is a previous resistance and a previous support. Yeah, you can see here as well. We hold, we hold, we hold. You could even say just this area as a whole. Here, you don't want to be getting in, because if you look, resistance, 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 support, we hold, we hold, we hold. So, that's not bad. But that would have been a nice trade. Congrats if you got that this morning. Very good. It is only 7:40 though. We've got quite a lot of time for this day. What have we got later on? So we've got median CPI. Nothing too much, just apart from a little bit of CAD news, which is normally irrelevant, really. Normally a little bit irrelevant. So it looks like we're coming towards the target. Nice bullish structure. I have to wait for some bearish structure. Let's take a look then at crypto, right? Let's take a look at crypto because I haven't seen what happened yesterday. I watched it a little bit. Let's get rid of all this shit that's drawn yesterday. So it looks like we made the all-time Bitcoin high. Through Asian session on Monday. But we never got back to those highs, which is interesting. 5 days still left for this weekly. It's still obviously very, very bullish. It's this move here, 4th of November, which is absolutely gorgeous. But as I said, once I start seeing this bad boy starting to fucking retrace, I'm going to be buying that bitch the whole way down. Try and get a nice discounted entry. In the portfolio. Yeah. So, what I want to focus on today is I want to look at our investing blog. I just want to understand from the basics of things, going through balance sheets. Okay, because once you understand the balance sheets, I think first of all it's interesting. It's interesting to just see. So I want to pick a company that we all know, and actually I'm quite interested in potentially, if the figures make sense, to short this bitch. For numerous amount of reasons, but yeah. So I wish I could move the screens like there. All right. So let's take a look then. I really want like the whole folders: investor relations, consolidated financial statements. Oh, here we go. Is this 2023? I want to get the. I suppose that's the most up-to-date one, isn't it? I expect the next quarter to come out. So June, July, August, September, October, November, December. Maybe they haven't come out yet. Let me take a look and see. Is there a normal day? When does the Apple financial statements for December 2024 release? Apple's financial statements for the quarter ending December are expected to be released on the 30th of January. The report will be for Apple's common stock. The report will be after the market close. The consensus EPS forecast for the quarter is $2.36, based on forecasts from 11 Analysis. The report EPS for the same quarter last year was $2.18. Okay, so it's increased, but not significantly. What's that math change that people are expecting? So again, once we're going through this together, we can start to see, again, just, what does EPS mean, for example? Expected potential something. But the good thing is, we've got ChatGPT to ask these questions, so please, what I want you to learn, if you get anything from this stream, and I know there's not many of us right now, and hopefully, as time goes, we grow, it's just learning new words and new things. I understand Forex is the main thing of what I've previously done, but I just think I want to learn new things as well. So the difference is obviously 18 cents divided by the previous was 2.18 times 100. So 8% increase. It's not too bad. So let me first of all, this is the first word. ChatGPT. What is this? Earnings per share. Thanks, Seb. Thanks, Sebby boy. Earnings per share is net income minus preferred dividends, not number of outstanding shares. Okay. So it's looking like an 8% increase on shares from previous, which is but again, these are just speculations, right? These are just speculations. So let's get into yeah, so the announcement is on Jan 30. I wonder if Apple has any articles in here currently. My feeling for it is, right, and you guys might agree or might disagree, but the past year or so, well, to be fair, it's been a while. They're just not innovating, and I'm struggling to kind of keep on the bandwagon of it. What opportunity lies with Nasdaq on the Mag 7 earnings, bro? What's Mag 7, mate? Oh, look at this. Again, how many times are they in lawsuits? So already negative news coming out. Apple CFO denies company enjoying 75% margins on its app store. Is he the new CFO? Yeah, I forgot that, Kevin. Look at others. It was impossible to accurately determine the standalone probability of its apps after it was accused and also of using a dominant position to extract exorbitant returns in the software center. How many cases? I think they've had previous cases where they've lost this, haven't they? They had one in Europe. Success for some other, yeah. I'd rather Jesse's figures are accurate, aren't they, Mr. Beckett? Right. Let's get back to like, it's funny, like my thing that's interesting is they just released a phone with AI in it. It's like, mate, I've got AI for free on ChatGPT. It's not any different. It's just I can click a button to use it. Why would I need to buy a phone for software? It's ridiculous. And I just think they've been lagging in terms of it. And you know, I remember back in the day, like the new iPad, when the iPad came out in 2010, it was such a revolution thing. It was sick. And I just don't see them innovating anymore. I mean, again, it depends on where they go in AI and stuff. But the Vision Pro was a flop. Too expensive. Magnificent 7, Apple, Amazon, Netflix. Ah, okay. So, Seb, are you saying collectively it's more what they all do as a group is what will kind of go to fruition as a whole? Analysts say artificial intelligence and virtual reality headsets might have lower margins than smartphones and App Store. So they've already in November warned. They've already put a warning. Investors that future products may never be as profitable as its iPhone business as it pushes into unproven markets such as artificial. Why would they be saying that? Is it because you know the financials are not looking as good and you're gauging a little risk? Interesting. Let me Okay, so let's just go through some of these here, right? So revenue, we understand what revenue is, but let's just get ChatGPT to make a nice consensus of the word. Revenue definition. They're the ones which really move the market. This entire bull run on Nasdaq has been fueled by them. Yeah, 100%, Seb. Non-operating revenue, yeah. So it's just overall the money that's been brought in. So total income from let me go a little bit further. So total revenue from goods and services is the main consensus for that. Which was up 6% from the previous year. Now, does someone in the chat know, does this count for inflation, right? Let's just say, for example, there's been 10% inflation, right? So the dollar is worth 10% less as it previously was. Then that 6% doesn't look as healthy, does it? Does it count for the net present value? Or does it count for the interest that's been taken? It's not interest, the inflation. Inflation rate, US last... yeah, this is about 2.9. And again, we're building from what we know before. We know about inflation, interest rates and inflation. The highest was 3.5. To be fair, their inflation has been nowhere near as bad as ours. To be fair, they had 9% 2022, yeah. But they've got it pretty sharp down. What's the interest So the interest rate of US, it's still 4.5. Yeah. So they're keeping it high. They did reduce it though in September, but also August to reduce it down a little bit because I think that'll probably make sense with the previous thing that we looked at, didn't we? Where is it gone? Okay, so they're the ones which actually move the market. Yeah, so I'm gonna when a company releases statements, does the numbers reflect inflation too? Yeah, so it doesn't adjust for inflation, which kind of gives you a skewed view, doesn't it? Right, 2 seconds. You need to say goodbye to Kate because she's going to work. 2 seconds. So Gold Street in that area. GJ's starting to find some res already. Fifteen's about to close in 2 minutes. Obviously, it's near to the 8 o'clock candle, which should bring the volume in. I keep on wanting to look at XRP, but I just so annoyed I fucking sold most of mine before the run, which is the whole part of this investing page. I want to make sure we keep on collecting them. Okay, let's just go through this again. So, next one is net income. Net income. Total revenue minus total expenses. Is that including tax? Is this including tax? Oh, oh fuck. Why do I keep on pressing that button? Net income does this. My fucking thing's in the way. There we go. This include. Oh. It does not include tax owed. It reflects the income after taxes. Okay. Yeah. It's the final take home. Okay, that's fine then. It's the final take home. Which was in Apple's case 14 billion. Oh, look at this. Down 35%. So even though revenue was up, net income was down by quite a significant chunk there. 35%. 35%. And diluted EPS. Bye, darling. Love you. EPS. Measures the company properly factoring in the potential dilution that could occur if all convertible securities such as stock options, warrants, or convertible debts were exercised or converted into shares. The total shares outstanding plus the impact of all convertible securities. It shows the worst case scenario for shareholders by accounting for potential dilution, providing a more comprehensive view of earnings per share. Net income, weight average outstanding, 1 million. This is slightly lower than the basic EPS, which would be 1 without dilution. Okay. So obviously ours is a little bit lower than 1. It's 0.96, which is also 34% decrease. Did you just give me an example of... Oh no, 91, okay. So that's also 30% down from the previous. Okay. Take a look at the next one. Net profit margins, 15%, which is obviously just the maths between this. Down 39%. Operating income, which I think we've just put down here somewhere. No. Operating income, def. I remember doing this all at uni, to be fair. And yeah, so it's gross profit. So this is not operating items like taxes. Wait. Represents a company's profitability from its core business operations, including the effects of finance, interest, and tax. Yeah. So it's the EBIT, yeah, okay. So revenue minus 200, which is COG, which is cost of goods. Yeah. Makes sense, makes sense. Net change in cash. So they're quite cash rich. Look at that, 294%. So they've got some money to potentially invest. Cost of revenue. What is cost of revenue? So what I want to do now is, I just want to see in September how it reacted to that news, because it looked like it was quite significantly different from the previous year. So let's take a look. To be fair, it's already had quite a big... So this was on the 26th of December. Let's take a look at September. When did Apple September report come out? It was on the 28th of September. Oh, sorry, 24 was released on October 31st. October 31st. So let's just take a look and see. Yeah. Can you see? 31st. A big change. So from 2030, where it came out, to 218. Significant change. 4.8 decrease. And that's where you would have made your money. Now, would you have been able to have seen that before? Well, if you look here, where's that other chart gone? Not that one. Where is it? Interesting. Right, let's move on. We've done quite a lot there. We've done a lot on the balance sheet, which is good, and we continue to do that work. So look at this. GJ has made the resistance as I expected. So where would have been the trade opportunity? Again, as I said, maybe for the first week or so, I'm just going to be watching. But as I said, wait for some resistance to form, which would have been this 15-minute closing bearish, break of the low, stop loss above. So you'd be currently running, I believe you stop above here. 20 pips stop, you'd be currently running in 15 pips profit. Now, obviously, it has an opportunity here. Think about it. The hourly candle has got 53 minutes left. The candle doesn't have much of a top wick. This could be the lower wick for them to reflip and fill the wick, depending on if we hold support. Now, you can see previously on the 1 hour, we've held resistance here, and therefore we could hold support. So what I would probably do here, depending on depending on how much money I've made so far in the month, I'd probably just close there. If I was up 10-15%, again, I tend to want to run more trades because I've already made the money for the month. But definitely would be break even. And looking for the next support, which would be down here. Yeah. Pretty simple, pretty simple. And Goldie is still at this high. No, it's not. So rejected off resistance as we expect. Obviously, we're quite bullish on gold, so I'd probably rather wait for buys. And where would the buys be? Probably when we retest back to 27.18. You can see this candle's pushed up with no retracement. So I'd probably look for a retracement here on Goldie. Oh, sorry, on Goldie. Thank you so much for all of the likes as well. I appreciate it, guys. I appreciate you coming back and enjoying the fun, enjoying the stream. So Jan 30 is going to be an interesting day for Apple. This is where the statements come out. So the next thing that I want to look at is real estate. Which I think we'll probably do a little bit later. I just want to still focus on these charts and see where we end up. But this is a prime example. The good thing about moving to as well stocks is I always find it really fascinating, especially like some of my mates got into Bitcoin, but because they've never traded before, they don't really know where to get out. You have an issue, right, with investing and such, just because we're humans, right? Let's just say you have a chart and whatever you're trading, right? You basically have two things that's going to happen, right? Let's just say you bought on this line, right? This goes all the way down, right? Think about it logically. The only way that you have two things that could happen. Let me just move this. You have price going into the blue, and you're going well, or you have price going into the red. They're the two options, really, right? Now, both things actually cause issues because I remember a lot of people getting into Bitcoin, it flying up. I think it hit around about 70,000 US, maybe 60,000, something like that. And because everyone is so happy, at the time, everyone was like, it's going to hit 100K, it's going to hit 100K. And what you saw is that Bitcoin then retraced. I'll show you where this was, if I can find it. So let's go on the monthlies. Yeah, it was up here. So when previously we got to these highs, everyone was like, yes, we're going to go fine, we're going to go well, we're going to go well. And then we went all the way back to 16K. Okay. A lot of people would not have took their profits here because they were waiting on the 100. But when it went back down to here, I bet you right now, well, I actually knew one of my mates, he actually took it out because he was stressed the fact it might go to zero. But what I'm trying to gauge at is you need to have an area where you know you're going to take profits. Or you could go, right, I've invested, let's just say 10 grand into Bitcoin. When you start getting, into your positive, why don't you just take out your 10 grand and therefore you don't really care where it goes because you've took out the money you've invested? And that's kind of the same as trading, isn't it? If you think about it, what we discuss on a daily basis with trading is the fact that you can go break even. And for example, like this one, I said that we could reject off this level. Looks like we have. And therefore, you either close there and be happy with the money you've been given, or if we rebound off it and we flip the hourly candle, which we know has got a high probability because it hasn't got much of a top wick, then you're happy with that decision. But you've made those rules. You've made those rules before you've got in. And I think that's what people struggle to do when they trade, when they're buying Bitcoin or whatever they're doing. You've got to have an exit strategy because there's no point of you. Let's just say you hold a stock for 4 years and it's running every single time. Like, yeah, I'm gonna be rich. I'm gonna be rich. You then in your personal life will start spending like you've sold, but you haven't sold. I remember doing that at the start of trading as well. Like, let's just say I was like younger. I was probably like 18. Made a bit of money, like £300, whatever. £300 in the account, but I hadn't withdrawn. Then you go out and spend £300 because you think you're Billy Big Bollocks and you think you're the next Warren Buffett, and then you lose the £300 in your trading account, and now you've just spent £300 in your personal life without actually withdrawing those funds. So do remember that it's all about remembering it's only the money you withdraw out the account that has any value, right? And there we go. So both examples today of things that have happened, and the analysis is quite good. I said that we would reject off 2,731.9 because we have a resistance here. And GJ, if it finds resistance around this area, you then should be able to get the sales back down to 190.8 at least, and potentially to 190.57. But looks like now it's made the low wick, it's rejected. So if this hourly reflips, we should potentially then get maybe more of a drive here. So let's just say you were in this trade, right? You took it off now because it hit break even. You've got then to say to yourself, is it exactly what I planned for? Did I take the risk off? Did I close it where I should have closed? These are the things you've got to capture. Because if you didn't close there, if you did not close there, you now be kicking yourself like, oh man, I should have took it off. I would have made 15 pips and I would have called it a day and it would have been a good day. And that comes from being able to plan what you want to see. You need to plan it. Because if you don't plan it, it's going to be a rough time. It's going to be a rough time. Right, let's have a look at a couple more articles. Wow, so look at this. US share of global foreign direct investment surges to record. Wow. I wish our government did this. God dang it. But unfortunately, the UK is backwards and I won't be here for very long. I put on one of my other channels, yeah, I got the horrendous news. Not horrendous, because I kind of wanted him to do it, but my manager at my job is leaving. Oh my god. The past year, I've literally been telling him how good he is at his job and that he should be getting paid more. And he should be doing things a little bit different. I've told him that I want to get into consultancy, and we kind of went through it together. And now he's leaving to do consultancy. I was like, oh my god. This dude. So that's a spanner in the works. I was saying, me and Caitlin 2 days ago, looking at like our 5-year plan, where we want to be, what we want to be doing, planned it all out, and now that has just put a spanner in the works. Because the only reason why I like the job currently is, well, I still like it, and I still know what I'm doing now, which is good. I've had at least a year with him. It's going to be interesting to see. The US has enjoyed a surge in greenfield foreign direct investment. Number of new projects established or expanded 12 months to November. Wow, look at this. And the UK is fumbling the bag. Oh, this is what I want to go into soon. If you actually haven't already, make sure to go check out my Stop Loss Matters TikTok page, because I'm going through car finance currently as a whole. I'm actually going to do a video on it today as well, about anyone in this chat who wants to buy a car, please do not finance it. And I actually want to I might for the next session make a little presentation as to why. About 80% of the new vehicles sold in the UK are bought on finance, which makes sense because people can't afford the full, which is why they shouldn't be buying it. Yeah, I think to finish off, we could maybe start this conversation. Who in the chat has financed a car? Because I know for a fact, I know there's ways that you can do it, which makes sense. For example, you could start a company that invests in real estate. You then buy a property. Maybe you could do interest only. Therefore, you have more cash through the month. And then you can use that cash to buy a car. Okay? That is the only reason it makes sense. Or you could say, well, Max, I don't want to fork up £20,000 to buy a car. I'd rather use that as investment purposes and then finance it. And that makes sense as well. But most people don't do that, do they? Most people are kind of caught in the financials. And, you know, they can't afford a 20 grand car. Especially the fact the average new car. I mean, let's just take a look. I really want to see this. So, let's just say an absolute normal car, Peugeot 208. It's probably 2008 now, isn't it? Oh, that's a bigger one. Okay, let's just do 208. So let's go to Peugeot's website. And we can start drawing out. Let's just go onto their menu. Cars. We'll just get a petrol car. The new 208 petrol, right? Okay, shitty car. It does its job, to be fair. It looks pretty cool. Again, you're paying for the luxury of maybe the entertainment. However, let's just go and work out this maths over here. So, so here is the this is the value. So let's just say you get a 1.2 liter. I mean, look at that price, bro. Holy fuck. So 23. What the fuck? Why is this? Okay, it's 23,935. Okay. So let's get a Google Sheets up. I just want to start this conversation because I want people to. This is something that I'm very well versed in because obviously my dad has done well with cars and he understands it. So let's just say here we've got a Peugeot. I've probably spelled that wrong, haven't I? Yeah. 208. Okay. The price is. What was it? Is this the monthly payments? I want to go. So you have to pay extra for service contracts, not even included. Fucking hell. Okay, so this is the tax band. Price list. So if I get Peugeot 208 on finance, Peugeot 208 finance deals. No. Okay, here we go. So the price is, can you guys see my screen here? Oh, you can, nice. You can actually see all the way up to there, so I don't know why I keep on moving things. So this is it, right? This is it. 23,935. 23,935. 1,935. Okay, so that's the price if you bought outright, which would be the worst decision you could probably do, right? The finance. Let's work it out, okay? 209 a month. Okay, and it's over 47. So 209. And this is bog standard. Months is 47. So the total would be 47 months, which is quite a significant time, isn't it? You'd have it for quite a long time. Is it 40 years? Sorry, 4 years. Yeah, it's 4 years. Some of this. Oh, not some, sorry. What am I doing, dog? This times by this. Okay. Let me just take a look as well as anything else on it. So And then that's so this is on top. So fucking hell, you have to put a £9,000 deposit on. Holy mackerel. Total amount of credit is 14,000. Optional final payment to buy is £9,000. Total charge to credit is 5,000. Total amount payable is 29,000. Is that if you Is that if you bought the car after? I think it is, isn't it? So deposit as well. So you'd have to even tie up. Let's take a look here. 6,517. And they help you with some of it. They go, yeah, we give you an extra 3,000. Okay. Total price of the car, total amount of credit is 14,000. Total charge for credit is the 5,000. 10%. Miles per annum is 6,000, so you reduced on the miles. Is this the total amount then? Is that how much you're going to be paying overall? Optional final payment to buy 9,750. So that's optional. But in the end, you won't have the car if you just pay for. And is this on a 1.1? Where's the figure? Is it just £209 for 4 years? But with the fact that you have to give it the deposit. And that's not adding any of the warranties or anything. You've got to add them on. So I think it's this. 1 second. Let me just work something out. And is the 10% per annum, okay? So it's actually 2.9 times by 1.109. Then equals this times by 1.109. Drag this down for 4 years. Not the first one. Okay, 13,000, but then you've also got the deposit on. So let's just say in total it costs you 13 grand to have this car for 4 years. 13 grand to have a Peugeot. Holy fuck. Okay, now let's just go on Auto Trader. Now let's go for a let's go for a Peugeot. $208. More options. Yeah. So let's actually just see what a brand new one costs. Holy fuck. So if you bought a new one, if you drive it off the line, this one's already lost 7 grand already. 7 grand out of 26 is, you know, nearly a quarter already gone. It is a quarter already gone. But my whole process, and I'll show you in the next session, is if you go 4 years, so 2025, let's go to 2021. Okay, 2021 prices. Let's filter, not sort, low to high. So these have got big miles. Fucking hell, that's like an old one. So they're around about 9 grand. So if you just saved yourself the time and got a cheaper one for 4 years, a 4-year model, the difference, obviously, you can see in that time period, it costs 23,000 flat if you just bought it. The saving would be this 15 grand you've already saved. But then what you got to look at is obviously what happens after. So we'll do the age again. So we'll go 4 years after, right? 20, 19, 18. We'll do 17. And they're about 2 grand, right? Let's just say they're 3 grand as an easy medium. 4 year extended. They're about 3k. Okay, so you've lost 5 grand having that car for 4 years, not 13. So people are trapped in this race to try and get a finance car, but you are spunking money, especially the fact that average earnings for people is 30 grand. I'm trying to build up cash flow to finance a car. Bad idea. I think so, mate. Mate, keep it cheap. Keep it. Buy a second-hand car. Get a mechanic that's in your local area. Build a relationship with them. You need to remember, mechanics who work in their own mechanic workshop are so much more skilled than anyone who works in Peugeot or any dealership. Because you need to think about it. That's their business, right? They need to be skilled enough to deal with any car that comes along their way, right? Whereas if you go to Peugeot and just a little insider, obviously my dad's good mates with a lot of mechanics. What they tend to do to save on costs for the finance group, because obviously a lot of the times the packages is where they get warranty, so if anything goes wrong, it's covered. To keep those costs low, they'll have maybe one person that's skilled in the workshop, but the rest are all apprentices. Okay, so they're on minimum wage, and they're learning the skill, which is fine. I get that for loan costs, but people have that false representation that they're going to get the best mechanics on their car, which is just false. And especially for the fact that you see the bill and they go, oh look, we saved you 3 grand, it's in your finance package. But actually if you went to a normal mechanic, it would cost you 200 quid, because they do it, they don't rip your eyes out, right? That's where they get you. So my advice to you, and the advice that my dad has given me from time to time again, save up the money, buy a little banger. I've had a Fiesta as one of the cars. We've got an S5 as well. Fiesta bought for like 4 grand. Is probably worth like 3 now, maybe 2.5 maybe. So I've lost 2 grand on it. I've had it for like 4 years. So think about those monthly payments. I've been paying 2 grand for 4 years. So 4. Oh. Divided by 4, and then equals this divided by 12, which is, I think it's 60, yeah. £41 a month I've been paying, not 250. And then once your cash gets better, and once maybe you do better in your work or whatever, and you save up the funds, you then just buy cash in hand a 4-year car. Because the depreciation is vast. Like, just to give you an example, once you, obviously the first, maybe let's just say 10 years where you don't have much money and you kind of like, oh, I wish I had a nice car, it would be really nice for me. That is the time that everyone struggles to do, because they want a new entertainment system, they want the new sheets, they want to show people I've got a new car. But the issue is you will just fuck yourself financially by doing it. Just to give you an example, my dad bought a Aston Martin. He bought a DB9 And again, 4 years is normally the time you want to buy a car because that's where most of the depreciation goes. I think 60% of the depreciation normally occurs after 4 years. So, you're saving that money. The people that pay finance for those cars have paid that depreciation. They just put it in a package where you can't really see it. So if I go here, when did he buy it? I don't know. It's probably about 13. So it's probably like a 2000, maybe. Let's take a look. 2000. We'll do 9. See what they look like. 1 sec. Yeah, so something like this, right? This is 20,000. My dad bought his for, I think it was 35 at the time. He drove it for 4 years, and he sold it for like 30k. I think he bought it for maybe 30, 38, and sold it for 30k after 4 years. So it cost my dad £8,000 to have an Aston Martin DB9 for 4 years. If you buy this Peugeot, it'll cost you 13,000. See what I mean? Just because you want a flashy new car, which after you drive it off the line, it's not new anymore, and then you're in the same boat. But whereas these, you could buy any of these, and yes, some of them have miles, and yes, you might have to put a little bit of money in to do it up, but you have so much more money in the bank from not going that route. I mean, if I go to my work, mate, if I go into my work, everyone has got a new car. Everyone. And it's like, mate, you guys are on 30,000 a year as a fucking scientist. Why have you got a 30 grand fucking car that's now worth about 9 in 4 years? You've just spent 21 grand over 4 years, but you're on 30 grand a year. You've nearly took a whole year's salary to have this fucking car. So please, for anything that's glory, do not buy a new car. Unless, as I said previously, let's just say you have to pay £230 a month for this, but you've bought an investment property. You've got someone in it renting. Let's just say you've got interest only, therefore the mortgage payments monthly are not very high, and therefore you're getting a lot of cash from the renter. Let's just say that you make £600 from the rent. Then you could then use that cash, which is just cash that you've done really fuck all for, to then buy a new car. I understand that, and a lot of wealthy people do that with big cars because they have 4 investment properties and that pays for their Rolls Royce and they don't give a fuck. That's what they do. But if you don't have that and you don't have investment properties, please don't buy a new car. That's just my opinions. Again, if anyone brings to the table of maybe why and how it's cost savvy, then I'd be interested to know and learn. So GJ's rejected. It made that hourly high. It's then came back down, and then we should be continuing back down here now to 570. And Goldie the same, the rejection. So really good stuff. What's your next car? Well, I am going to be potentially in 2 years' time moving to Dubai, so I don't really know if I want one. I've been driving this car for how long have I had it for? Like 6 months. This is my dad's Evo 6. But man, this is the killer. This is when I knew my dad has got fucking money. I've been driving this car around, right? But bearing in mind I have to go to work, which is quite far away from me. It's like an hour drive each way. I spent upwards of £400 to £500 a month to drive this fucking car, bro. Like, genuinely, I spent this thing, every single time I got in it, I'd have to fucking fill it up. Like 40, 50 quid. It's ridiculous. But, to be fair, this colour is naughty on this. But again, think about it logically. My dad bought this car maybe 20 years ago, 10 years ago, for £12,000. They're now around about 24 grand. So he's doubled his money. So he's made 12 grand on the car. And he's also had a car to play with. Trust me, when I speak about cars, my dad is the absolute goat of it. You remember when I said before, he bought in 2005 a Lamborghini Countach, which we're doing a tour in actually this year. So he bought a Lamborghini Countach. To be fair, this is a nice version of it, but this is the model he's got, a QV 5000, right? This is in actually peak condition. This has only done 14,000 miles. My dad probably has The highest mileage Countach in probably the world, maybe. Well, definitely the UK. I think it's like 65,000 miles. He's done loads with it. He bought this in 2005 for £50,000. Now, the only way he could have done that, and obviously he's done well in this company, whatever. The only way he could have done that is because he wasn't a fucking retard and bought a fucking brand new Range Rover that he spunks 100 grand on every time. Now, remember that. Hold the wealth. When you're buying a car, you should be buying it knowing that it's not going to be depreciating so much, because once you get the capital, once time goes on, once your overall income increases, your overall cash flow increases, you then can buy these cars and just you could even shove it in a warehouse and it'll make you significant amount of returns only because you didn't buy new. Okay? I mean, the prime example, which I go on my TikTok, make sure you go follow it, is the Tesla. My dad always loved Tesla. He talked about Tesla when the Roadster was out, which is the first car that ever came out. And he wanted a Model S. He wanted the fastest version, obviously, because it's like cool. So I think it was is it the 90D at the time? I think it was 90D. Okay. I think it was the 90D. The 90D, the one with the thing on the back? Let's take a look. No, it's not the 90D. 90D doesn't have the wing on the back. Which one's it called? Anyway. And I said to him, "Oh, Dad, are you going to buy the new Tesla that just came out?" I think it was going for £100,000. £100,000 new, right? He goes, yeah, I'll buy the car, but I'll buy it in 4 years' time. And he did, and he bought it for maybe £36,000. And now, I mean, this one is not the exact model, but they're probably around 30, maybe 25. So he's lost maybe five grand on it. 5 to 7k on it through, and he's had it for 4 or 5 years instead of fucking 70 grand in 4 years. Think about it. So yeah, that's my advice for today. I'm gonna head off now because I've got to do my other work and I'm excited to get onto that. But yeah, I appreciate you guys being here. I know there's not many of us at the moment, but hopefully we'll continue learning, investing, looking at real estate, looking at crypto, looking at finances, but looking at economics as well. But also we'll get into the trading thing of things as well. So yeah, thank you so much for coming on. Make sure to give it a like before you leave. I appreciate you guys all being here. Thank you very much, and I'll see you in the next one. Peace out.